Alright, so in this video, I'm going to walk you through the importance, the essence of how you should always look into the market or the chart or the stock that you're trying to trade into, dissect it into a couple of different time frames. It's very important that you do that. That's our multi-time frames, and how do you choose the logical combinations. Now in this video, I am going to take up the Indian equity market, the logic I am going to apply to the Indian equity market and find the combination of different time frames. I will do my best so that you understand the logic, and if you've understood the logic, then you can apply that to any exchange, any market, any asset class. Alright. So let me start with the basic. When you open up a chart, if I tell you to, okay, let's analyze the chart of Nifty or Reliance, Tata Steel, or let's say Apple or Microsoft, which is the by default time frame that you open up first? It's a daily chart. Of course, it's always the daily chart, and the daily chart, of course, is the most important one if you honestly ask me. And now if I ask you that if you have to go 1 degree higher in terms of time frame, and if you have to jump up one time frame larger than the daily time frame, which one will you open? You'd say it's going to be weekly. Of course, it is weekly, and the weekly charts give you a very good understanding of the intermediate trend. Now my question to you is, how many trading days make up a week? So Monday to Friday, if there are 5 trading days, then essentially I am looking at a multiplier of 5. There are 5 days which adds on and makes up my weekly chart. That's all right, that's good. Let's extend this discussion further, and I'm ask you that what's the next higher time frame above the weekly? Yes, it's monthly. And I ask you the same question, that how many weeks will make up this month for you? Then you'll say around 4 and little above 4 at times. So 4.2 if you ask me, it is going to take me to the monthly chart. So if you pay attention, we are using a multiplier of 4 to 5, around 4, 4.5, 5. To go to our higher time frame, and this progression is very natural. All right, daily to weekly and weekly to monthly on the charts is very natural. Keeping this logic in mind, let's do it the other way. That is, if I want to drill down, if I want to come down from the daily time frame to one time frame lower, what should I choose? Now for this, what I have to do is break down the daily in terms of minutes. And in the Indian equity market, from 9:15 a.m. to 3:30 p.m., there is 375 minutes of trading. 375 minutes of trading. The best thing about the 375 minutes of trading is it has 5 in the end. Because I notice a 5 in the end, and on the higher time frame, the progression rate of progression was 4 to 5, I stick to 5, and what do? I divide 375, I divide it by 5, and it gives me 75 minutes. That's my lower time frame. I want to divide 75 minutes divided by 5, I get the 15 minutes. That's my next lower time frame, and similarly 15 divided by 5 will give you 3 minutes. So there you go. This is a very logical approach, the way I see it, that if I want to look at intraday charts structurally, keeping in mind the same progression rate, I am going to use 75 minutes, 15 minutes and 3 minutes on the downside, and I am going to use weekly and monthly as the higher time frames from my daily setup. So whenever you do a trade, it's very important to keep in mind a couple of different time frames. So let's extend this a little bit more, and let's say that you are trading based on the daily charts, completely based on the daily charts. This time frame, the time frame that you're going to trade, it can be daily, it can be 3 minutes, it can be 15 minutes. We are going to call this trade frame, the frame in which you are deciding your trade, TF, trade frame. These jargons are going to be important later on as we go into our trading strategies. So, if your daily is your trade frame, TF, I always suggest you keep an eye on TF plus 1 and TF minus 1. TF plus 1 is going to be your weekly and TF minus 1 is going to be your 75 minutes. So, whatever is your TF or your trade frame, you always keep in mind, keep an eye on a one time frame higher as well as a one time frame lower. What are we going to watch? What are we going to look at these higher or the lower time frames? This definitely we will discuss as we roll forward towards our sessions on the different types of trading setups. But keep this in mind that multiple time frames we need to choose, and I'm going to use 2 to 3 time frames whenever I decide upon a trade.